Hello, folks. We got our fourth margin hike on COMEX. The notice came out last night, and the change goes into effect at close of business today. So this will be our fourth margin hike in silver and gold. As I've pointed out in the last couple of videos, in my opinion, the only risk that the precious metals are currently facing is the COMEX hiking margins. And so again, we've got our fourth margin hike goes into effect at close of business today. We talked about this, and I believe that we saw one of these on, what was it? It was Monday. Yes, Monday. We got, it's that price bar right there, about $17, I think it is. Anyway, that was, in my opinion, that was a concerted COMEX LBMA price smash against silver in particular, because silver's where they're hurting the worst on the, leveraged futures contracts sold short, i.e., they sold a contract, but they don't have any metal. That condition is worse in silver than it is in gold, and the risk of a CME failure, COMEX failure, is significantly greater in silver than in gold. So anyway, they attempted a big smash, worked for the day. They got a big smash, painting the chart. If you're familiar with that term, you could talk about painting the chart. That's a horribly toppy looking candle. I mean, a huge, what do you call that? The evening star, or even a gravestone doji. Anyway, very toppy looking candle. And then we get a big day the next day. Well, the reason that occurred is because they're over here trying to suppress the price of silver, and then gold takes off. And so, the day after they play their manipulation games in silver, gold runs $170. Well, people aren't stupid. Silver gets smashed and gold runs $170. Well, clearly there's nothing wrong with silver. It was a manipulation. But, again, that Brian rambling this morning. Back to here. So anyway, we had one of those Monday. I suspect that we'll get another one of those, whether it happens tonight or tomorrow, but along with the hike in margins, the fourth hike in margins, we'll get another smashdown attempt from COMEX LBMA. And think about it, folks. If their current manipulations fail, they've lost. I mean, they just lost. Horrible. All these people that are short paper silver, from $40, $50. Well, they've been shorting it all the way up, But anyway, horribly short in silver, and there's the price just keeps running away, Monty Python, run away, run away. And there you are short this thing, trying to break the price of silver, and it ain't breaking. And, from their perspective, they kind of have to keep trying because if they lose, I mean, if silver breaks away from their manipulation and continues to run, $40 $40 is long gone anyway, folks, but $85 is long gone. So anyway, I fully suspect that they will continue attempting to manipulate the precious metals prices lower, which means we'll see a fifth. If four margin hikes don't do it, we'll get a fifth one. Money flees the mining stocks. We'll look at them. We got a little bit of a correction. I wouldn't call it fleeing by any means. Silver and gold decreasing. I don't think so. This is what a notice looks like from the CME. It's specifically, they send multiple notices, but the one of interest is a performance bond requirement notice. It was issued yesterday, excuse me, the 27th. goes into effect on 28th, close business on the 28th, which of course today. And if we keep going down, what we see is this is 5,000 ounce COMEX silver contract. It's going from a 9% margin to an 11% margin. So yeah, 9 to 11, and it depends on the month. So we're 6 months out, and it's going from 9 to 12. And so it depends. Looks like they're trying to suppress the further out prices by raising margins higher on those. That's what I'm seeing here. And that correlates. I saw something, somebody saying that the COMEX in silver is currently in backwardization for 5 full years. 5 full years, i.e. the futures markets on the COMEX are broken. They're not working the way they're supposed to for 5 years into the future from this point. So anyway, these, I hate to say that they're a joke. They're not a joke, but we are seeing the games that these financial entities play, and their games aren't working very well right now. So, and we're seeing that. This is the price of silver in Shanghai in blue, and so you can still see 131. So to put an ounce of physical silver into your hot little hands today, it's going to cost you $131 in Shanghai, and they'll actually sell you the silver. You walk away from the exchange with silver in your hands. In the West, silver is only going to cost you, looks like $115. Of course, you won't actually get any silver for $115. They'll give you a receipt and tell you, yeah, in 4 to 6 weeks, we'll ship it to you. But so anyway, this is part of the game that's going on right now. And game, this is part of why our beloved friends at the COMEX are having such a hard time breaking the price of silver and gold, is because they can't affect prices in China. And so they can manipulate all they want on COMEX and LBMA unless the Chinese decide to play games with them, which they aren't. The Chinese are not going to make it easy on the West right now. Ain't going to happen. And short of China helping the West out, this divergence will continue. Famous last words. This chart is showing us the premium or the delta between Western silver prices and Chinese silver prices. Look at that. It's currently, what are they saying, $16.60. $16 difference between real silver and paper silver. But let's see. Let's keep rolling here. Silver, like I said, a big attempted manipulation on Monday. It was looking very successful. I mean, again, that's a horribly toppy looking candle. And then we come out, that was yesterday, and a big day up. What was that? $8.24. Oh yeah, so silver really topped. Silver topped, came back with an $8 up day. And then gold, again, toppy looking. And then, because in my opinion, the Fed participated, was the key player, most likely, in an intervention into the yen. And so there was a yen intervention. Gold ran $170, and here we are today. This attempt on Monday to break the precious metals markets failed horribly. And, in my opinion, may those people burn in hell. But that's just me stating my opinion. These are the mining stocks, obviously. Monday we got a pullback, but not consistent across the board. Each of the stocks are playing differently, behaving differently. And so, if we look at pause, there's Monday, big pullback. Well, that's a bottoming candle. I mean, so we got a 1-day pullback and then bottoming, and now price headed back up. Similar in Hecla, pullback, bottoming, sideways right now. Wheaton, pullback, big bottoming candle, gap on the open. I mean, you know, this is, if you're wondering, in this, my opinion, if you're wondering about the strength in the precious metals mining stocks right now, just look at Wheaton. This is a mega cap mining stock, and it is displaying tremendous energy, tremendous. I just, that's a strong stock, folks. How many different ways can I say it? So anyway, stocks are doing just fine. Maybe if you're a super duper trader, you managed to, you know, you got out at the top and then you bought back in here when the correction was done. And, you know, now we're back off to the races again, or we will be. Probably we got to get through this manipulation of the metals prices before the stocks really take off again. But anyway, that may have been the correction. And again, the stocks don't behave, they're not in lockstep. And so here's Avino, for whatever reason, it hardly corrected. And yesterday had a big up day, and now is continuing today. They probably got some good news or got a drill result, something. But anyway, the stocks don't run the same. I think I had some more to babble about in here. We've looked at this. This is the history of margin hikes. 1980, they just outright changed the rules. In 2011, it took 5 hikes before they broke, and maybe it's just a coincidence, but it was 5 hikes in 2011, margin hikes, that ended or corresponded to the end of that precious metals rally. What we've had so far, we had 2 hikes in December. They changed their margin calculations in January from being a fixed price to a percentage. And they buried another margin hike in this change. So this was actually our 3rd hike, and now today we've got our 4th hike. And as I stated, I believe we saw one of those Monday. You know, they attempted to break the price on COMEX and LBMA. They failed horribly. And China, the price of silver in China didn't move. So we get a $17 manipulation in silver on the LBMA and COMEX. Silver didn't move in China, folks. I mean, and that goes back to my last video with the bifurcated markets. There is not a single silver market on this planet currently. There's at least 3, maybe 4 different silver markets, as I pointed out in my last video. So anyway, it's interesting times. This is bottom line for me. The risk in the precious metals is to the upside, folks, because we don't know. We go to bed. We go to bed one night and we wake up the next morning, and you know the Fed's doing an intervention into the Japanese yen, or rescuing the bond market, or who knows what else, or the U.S. is dropping bombs on somebody, you know, another sovereign nation, by the way, and we wake up to bombs falling. Well, you know, when bombs are falling, and you go, oh, I better go buy some mining stocks. My guess, I could be wrong. My guess is you'll be a little bit late to buy mining stocks when the bombs are falling, you know. But that's just me being a little bit silly this morning. Fed and Treasury playing whack-a-mole. You know, they try to suppress the price of the metals, and the Japanese yen goes into the tanker. They try to save the Japanese yen, and the metals take off. I mean, they truly historic times we're living in my opinion. Folks, I've gone longer than I intended to, but you know, this was just a quick update. Primary communication, they've hiked rates, margin rates, a 4th time on the COMEX. We may see some action related to that today, probably going into close of business. Sigh. Talk to you soon, folks.